Hey guys, Stock Saturday, and it's been another pasting of a week for me. 2 weeks in a row. It's sort of always never nice to see, but things are sort of potentially going to get better towards the end of the year. I'm obviously in a high risk portfolio, so it comes with the territory. But yeah, so I'm down about 9.5%, 40,000. That has come sort of mostly on the option side and the crypto miners. Gold down a little bit as well. But yeah, so compared to the markets, the S&P down 1.2%. So sort of had a little bump at the end of the day. At the end of Friday was down sort of 2.95%, middle of Friday, and Nasdaq is so up on Friday, but 3.62% down on the day, down on the week, sorry, and was down 5.4%. So yeah, maybe my loss isn't quite so different to the markets. I was kind of thinking it was, a couple of percent down, and I was sort of close to 10%. But yeah, when you sort of think 5.4% down, middle of Friday, not too bad. Obviously, semiconductors have been hit a reasonable amount, despite sort of Nvidia earnings looking pretty good, or weren't sort of quite enough to keep the market up. Some sort of macro things not looking all that good, but I think we can see sort of better times ahead. Broadcom back under 200, TSMC 180. It's not the end of the world. Applied Materials, certainly one that I'm considering topping up. Things still look pretty good. CME Group is sort of the counter at the moment. I guess volatility. People do a lot of stuff on CME, so they're seeing record volume. And yeah, some other stuff sort of doing okay. Adecco Agro, I did note, are sort of considering Teva's proposal of an investment, so that's interesting. You may notice Stellantis down at the bottom here. We had the earnings, which I will come to, and yeah, basically weren't good enough for me, and I decided to sell that position. So shame to see it go. I was down, I think about 11%, 9% with the FX, I think, on price, but I've had about sort of £1,800 in dividends since I bought it. So yeah, green by about 10%, I think. But yeah, nothing too much there. So reasonable amount of earnings from my portfolio. I'll sort of go through them week by week. This week I am looking at Riot and Stellantis, and some interesting news from Equinox. But Riot sort of came out with their Q4. We kind of know pretty much all of what this is going to be, aside from, it's nice to see costs. We know what sort of the revenue pretty much is, because they've already come out with this. So even at Q4 high prices, basically the net income for the year has been largely driven by increase in gain on balance sheet Bitcoin, which isn't really net profit. So 109 million isn't really 109 million. A fair amount of interest income as well. So that's not, really income. It's not income from the business. It's just cash sat there. And then you have an enormous amount of depreciation and amortization. So yeah, not exactly looking super healthy. A hell of a lot of stock-based comp as well, 125 million. They do go, they're at sort of great pains to say this is expensed as stock being unlocked. It's not necessarily given to the employees. This is sort of stock-based comp based on targets that most likely haven't been hit yet. So they expense it as unlocked, but it isn't necessarily given to the employees or sold. And yeah, you have sort of some other smaller costs, unrealized gain on marketable securities, and yeah, basically they sort of come to this adjusted EBITDA number that isn't really true. And they give you some of these sort of cost to mine one Bitcoin, excluding miner depreciation, which, as we know, was 212 million, so it is a hell of a lot, but excluding that is 32,000 for the year. That's for the whole year. I think it's probably a lot higher than that currently, but they're wanting to do whole year rather than Q4. Including minor depreciation, 64,421. So not exactly ideal. 96.9% of the sort of revenue for the average of 24, I'm guessing that is. And yeah, basically it's not going to look ideal at the moment. They haven't been getting their fleet efficiency down as others have. They've been buying Bitcoin and, talking about yield on their Bitcoin like MicroStrategy have, basically. So yeah, Riot sort of looking, I would say, fairly poor, but basically I think a rising Bitcoin price should heal all wounds, and then I would be looking to get out. But yeah, certainly not the most efficient miner. I was quite tempted looking at Marathon Digital's figures basically before earnings. I was quite tempted to switch to them. They've got sort of a hell of a lot more Bitcoin on the balance sheet, considering the higher market cap, and they have 53 exahash operating as opposed to Riot's sort of 33, 31 and a half at end of Q4. I think they're at 33 now. Just Marathon seemed sort of a bit better value basically, but they sort of rocketed up on earnings, and I kind of got a little bit sort of anchored to what they were before, but still considering that switch, to be honest. So Stellantis results sort of came out not looking particularly good. Didn't expect them to be good, but they're sort of painting over the cracks with a lot of talk about new launches and exciting growth ahead. The priorities ahead are execution and profitability, I would hope it is. They're sort of talking about their partnership with Leapmotor, return of the ICE Dodge Charger, so the petrol and diesel versions, and a mid-sized Jeep. So maybe pulling back a little bit from the massive electric push. They obviously wanted an electric Dodge, and sort of pushing more to hybrids as well. It does seem that people have had a not a rethink about EVs, but pulling back a little on the targets because they're just not selling in any great numbers except in China. But basically this was the main reason. So full year 2023 they sold nearly 6.4 million vehicles, in combined shipments, and this year they're looking at 5.5, or 2024 5.52 million shipments. So obviously cost of revenue has gone up due to pay rises and inflation and that sort of thing, and they're down 14% in shipments. Again, kind of knew that was coming, maybe not quite as much as this. That's pushed net revenue down to 157 billion. Operating income down 84%. That is a hell of a drop, as I say. Costs going up. They have a lot of fixed costs, which on lower shipments, they don't go down. Inflation on the wages. They got a huge pay increase deal in the US, and not looking ideal. Net financial expenses income, so interest and the financial services side interest, 345 million, so that helps a little bit, but maybe shouldn't be taken that much into account because they have less cash on the balance sheet. Operating income is probably what needs to be focused on a little bit more. Similarly, so profit before tax was higher, and then a tax benefit of 1.5 billion sort of brings net profit up to 5.5 billion, and sort of 184 euros per share. But I would say this 5.5 billion isn't really the one to be focusing on, because the tax benefit won't be there forever, and interest income may not be there forever. So I would focus on the operating income. Maybe this is has sort of been a fairly poor year, and things are going to come back, as they're saying. They've got lots of new launches and cost cutting and that sort of thing. But yeah, 3.6 billion in operating income, maybe that doubles. I can't see it's getting back to 22 billion anytime soon. But they're at 40 billion market cap still. So sort of on 7 billion of operating income, that's, nearly 6 times earnings, where they've always sort of been at 3 or 4, and that's with a doubling of profit. So it just looked rather poor. Noting where the losses have come from as well, North America is down quite a bit. They're sort of pointing out inventories have been lowering, and this sort of should improve, but down to 1.5 million units. Europe has sort of fared a little bit better, only down sort of 2.7 to 2.57. Middle East and Africa sort of doing okay, really. South America actually increasing, so yeah, fair enough. And then the smaller markets, India, they sort of never really do a huge amount, but 91,000 down to 66,000. China has sort of similarly dropped 65 to 46. And Maserati, sort of somewhat of a collapse, 27,000 down to 15,000. Obviously small numbers compared to these, but they're very, much more expensive cars. So you would hope for something a little bit better than that. And in the second half, these numbers sort of maybe even a bit more stark. China sort of completely collapsing. Maserati down 50% on the same half last year. And everything else sort of similar numbers to the rest, really. And 2024 was basically so bad, largely due to the second half. So 15% drop in shipments in the second half, 21% drop in revenue, but an operating income loss of 3 billion euros. So not great at all. Again, a large tax refund sort of pulls that back to 127 million. But I would sort of focus on the operating income itself, because as I say, tax loss won't be there forever. So yeah, 3 billion loss was appalling. So I wasn't particularly happy with the results in general. As I say, sort of knew they weren't going to be great, but it was a bit worse than I thought. And I've always sort of been somewhat happier with Stellantis compared to people like Volkswagen and GM and the Americans, because they had a much better balance sheet. They were sort of large. They had quite a bit of debt, as always, sort of 29 billion euros in the end of 2023. But this 43 billion of cash and financial securities as well. They were at sort of 21 billion euros in net cash, and some more from the financial services side as well, and so 29 billion in net cash. And I always thought that was a strong position to be in, and that got eroded away a little bit in the second half, or in the first half rather, of this year, of 2024, to 22 billion euros. Debt going up a reasonable amount and cash coming down. They were investing in the Chinese side and investing in upgrading some of their factories. Obviously got to go EV and upgrade things. And the second half, this has continued to get quite a bit worse. 37 billion euros in debt now. I'm guessing some of this is the financial services company, but it's still debt, and there is still some amount of risk there. Financial securities has come down to 4.5 billion, and cash is down to 34 billion. So, net financial position on the non-financial side to 2.4 billion, which is just over a tenth of what it was sort of the previous year. There is sort of still a large net cash side on the financial services, 12.7 billion, and that is sort of what's still keeping them fairly high, 15, but it's 29 to 22 to 15, and almost all of that coming from the car side, we'll call it. So yeah, pretty awful balance sheet, appearing to get worse. It may, that may sort of mark the bottom and things improve. But yeah, I wasn't happy with that. It was always the sort of cushioning blow that was there if results were looking a little bit worse, and now it isn't there basically. And then I got news this week that there was a 1.5 billion euro investment sort of going into Maserati to kind of revive them and modernise them, and they've basically axed all of that. So it's sort of somewhat thinking that they might be letting Maserati sort of wither and die. You sort of think without a lot of investment and something to sort of turn it around, sales sort of down 40%, 50%. They haven't really got a huge amount of new models. They're not really going electric. Yeah, there was sort of talk before of selling them for, maybe 4-5 billion euros, and now I would think they're, close to worthless, sort of like a withering Aston Martin end up like. So yeah, that was the sort of luxury side of Stellantis that I quite liked, and that is sort of basically going. They've still got Alfa Romeo. They make some, supercars and sports cars, but it's not a lot. So yeah, I thought, why am I sort of still holding on to this, hoping for better things ahead? I thought that money is better allocated elsewhere, but except that I may have, timed the bottom perfectly. We got a reasonably big development with Equinox Gold. Not something I was expecting. We sort of had the earnings not so long ago, and they were, given their forecasts, and not exactly talking like a huge deal was in the works. But I guess they have to keep this sort of thing quite close to their chests. But they are merging with Calibre Mining. So this is a purchase essentially, not a merger. It'll still be Equinox Gold. Calibre Mining will basically disappear, and Equinox will dilute 0.31 shares of for every Calibre Mining share, and essentially buy them out. But given it's a merger, there's no premium basically. I think there can be premium in a merger rather than just a straight purchase, but they've chose to do a non-premium merger basically. So buying them at current market cap price. From the sounds of it, the Calibre shareholders are not particularly happy. I think they think Calibre's undervalued. I think Equinox is kind of undervalued, but they don't think Equinox is as undervalued. They have a new mine in Canada under construction, and expected to see first gold pour in 2025. So by market cap, I think they are 1.8 billion US dollars market cap, so a bit smaller than Equinox. And yeah, expecting the combined value of the company to be 7.7 billion Canadian. So it's pushing them up a fair bit. Obviously, Canadian dollars much higher than US dollars. And they've done a new presentation based on this. Guessing they were sort of working on this even, in parallel to working on the main presentation before this went ahead. But yeah, they're saying they're going to be a major America's gold producer. Obviously got some in Central America now, some in Brazil, and quite a bit in North America. Canada especially, which everyone basically wants to be. Sort of mining capital of the world. Or, Australia maybe in there as well. At least gold mining capital of the world, I would say. So the sort of 2025 guidance is somewhat all over the place. They're adding what was originally Equinox Gold's numbers. They're adding the Nicaragua side of Calibre Mining, which is sort of 200 to 250,000 for 2025, and the other small mine gets them to 950,000 2025 guidance, which is sort of what I was hoping Equinox were going to be at without this merger, to be honest. But yeah, things are taking a little bit longer to achieve. but they also have this Valentine Lake, Canada, sort of just off the coast, and they think that's going to get them to around 1.2 million ounces once on a sort of annualized. I suppose, from mid 2025 to mid 2026, I guess they're saying about 1.2 million, but looking at calendar years, that's where we are. But then our analyst estimates are predicting them to be a bit higher, so they're saying 1.13 million ounces for 2025. So that's quite a bit higher than Equinox themselves are guiding, but who knows? On the EBITDA side, it has rocketed EBITDA up to 1,570. On the EBITDA side, it has rocketed up to 1.57 billion at the analyst consensus gold price of 26.50. So quite a bit lower than where we are now. We've dropped a little bit in the last few days to sort of 28.50, I think, on gold, but 26.50 is possibly a little bit of a stretch. So then Equinox sort of give this 1.905 billion in EBITDA at 29.50 spot gold. I think that's possibly a little bit over what we could get for this year as an average. We've been there a little bit, and sort of beginning of the year it was lower than that. So yeah, we'll see. And then 2026, 2 billion basically on the sort of consensus figures, and 2.4 billion, if we sat at 29.50 gold. So, you're getting close to Equinox's current market cap in EBITDA. So that would be a huge, huge boon. And Chairman Ross Beattie has always been basically saying that large gold miners are sort of valued more favourably than smaller ones. You sort of get a higher price to NAV, and yeah, they value 1 million ounces of gold far more than more than double 500,000 ounces basically. So this pushes them to Canada's second largest gold producer. Obviously, there's Newmont and Barrick and people around the world that are larger, but Canada, they're sort of saying, is the mining friendly place to be. So that puts them, way behind Agnico Eagle at 2.9 million ounces. They'll have 590,000 in Canada. But that is rather nice, and they're saying this basically pushes them into the seniors with Endeavour, Pan American Silver, one of mine, Alamos Gold, and some of the others. Fresnillo, obviously pretty large, but more on the silver side. And then you have the larger seniors, that sort of end up in I think Newmont in the S&P 500. I don't think the others are, but certainly in the smaller indexes. And so Ross is saying, with this comes better financing, comes higher allocation in ETFs, and more sort of natural, continuous buying, and it's just better for everyone, basically. You get a re-rating. They've sort of had this chart for a long, long while, that their price to NAV is lower than a lot of larger miners, and that they could essentially double if they went from 0.7 to sort of 1.3, 1.4 of Lundin Gold, with Lundin being a senior, and this merger causing two intermediates to become a senior, basically, by merging. I still think the analysts aren't really paying too much attention to, quite such a drastic EBITDA gain. This could be sort of Equinox's optimistic, projections. They have sort of overestimated and under-delivered the last sort of couple of years. But, if you look at sort of these, 200, 180, 230 million EBITDA quarters, they've been sort of okay. 2024 they ended up at sort of 600 million in EBITDA, but expectations with this new merger, they're expecting sort of 1.5 billion, and So debt to EBITDA coming down from 2 times to 0.62 times and potentially 0.25 times in 2026. That would sort of be a great deal better because no one likes debt. This Valentine mine does look very nice as well, 195,000 ounces per year, so it's about half of greenstone, 14-year life compared to a 15-year plus. But the gold grade, 1.23 grams per ton for greenstone. Valentine is 1.62 grams, so a little bit nicer. Should be lower cost. I think they've given the all-in sustaining cost projection is looking very good. There was a time when sort of good gold mines were 3 and 4 grams, but that has sort of largely gone, I think. And yeah, they're saying on track to deliver first gold in Q2, so potentially sort of next couple of months, where greenstone was sort of Q3 last year and is now sort of ramped up. So I think it's good to have this sort of not be another one of these exploration things where it's gold does well and people are starting building a new mine, or the juniors sort of everyone jumps into. It's like we're drilling and hope to have our mine online in 2028, and you think, well, I've got no idea where the gold price is going to be by then. It could do well, but if gold is high now, I kind of want gold now, essentially. So yeah, first gold in Q2 in a couple of months, basically, and sort of ramping up towards the end of the year, and hopefully sort of 2026 should start to look really good. This sort of part of my conviction, I guess, now more to buy the 2020 January 27 Equinox options so that I get all of 2026 because we're not really going to be ahead enough by the end of this year. I wouldn't have thought now with this merger. And so I've had to sort of readjust my model, sort of the way I'm valuing them, obviously with the higher shares. So 512 million fully diluted shares of Equinox, that's what I've been using. And with the sort of merger, there will now be 791 million shares. Call it meter cubed, if you like. Yeah, that's rather a lot, obviously, but we are gaining quite a lot. So there's warrants and convertible notes and all that sort of thing that you have to add in on top of just the shares to buy Calibre. But yeah, 791 million shares. They have 200 Calibre have 212 million of cash on the balance sheet and only 336 million of debt. So that does take the balance sheet sort of just from buying them a little bit better, because Equinox have 239, slightly more cash, but 3 times the debt. So yeah, buying them does make sort of balance sheet look immediately a bit better and gives them a large amount of cash flow to be deleveraging, as they're saying. And so yeah, again, they've given this production guidance 865 to 1.03 million ounces, and all-in sustaining cost, say, $1,500. I'm sort of noting that if their Mexico mine sort of does go ahead, they're waiting on that. If they will sort of sign a new deal, if that does go ahead, it will probably push the all-in sustaining cost up, even though production guidance would go up because it's a, I think, $2,200 all-in sustaining cost mine. But if they're happy to carry on and sign a new deal, it's worth doing if it's profitable. So $600, $700 gain on all-in sustaining cost of $2,200. So might as well do it. So economic news for the week. We didn't have too much. Sort of Monday, Tuesday, or Wednesday, really. Thursday had the jobless claims, sort of all looking pretty on track, continuing sort of a little bit lower than expected. Initial a little bit higher, but nothing too much. Friday, your UK house prices rocketing up, 3.9% year on year now. It was expected to be 3.4, is down from last month, but just continuous expecting this to sort of flatten out or even possibly go negative with higher interest rates. It's never happened. 0.4% up on last month. They just are very resilient. And then US core PCE, the sort of Federal Reserve favourite inflation model, was basically on predictions, down from 2.9%. That was 2.8% last month. So they've revised last month up slightly, but is now down to 2.6. So I think 2.6 is sort of the level that they were relatively happy with. They keep saying we want it to be 2%, but yeah, down to sort of 2.6 is where they were saying they were relatively happy, because it has been there sort of a few months back, sort of Q3 last year, I think. So yeah, that was interesting. That was about it for the news. So as I say, crypto miners and gold sort of took a little bit of a hit. Gold sort of not really too much, but it is down, as I say, with gold being down about 75, I think, nearly $100 from the top. I had a little bit of a cash. I had about £700 cash sitting in here, and decided to put that into Hive Digital. Thought, why not, really? Had to be one of them. I just wanted to sort of deploy that into one of the miners. CleanSpark obviously is quite a large position, similar with Riot, and yeah, I just thought I only got a little bit of Hive here, so I would put that in. But yeah, other than that, everything else dropped. CleanSpark under $8 now. Riot sort of back under 10, well under 10. On the interactive broker side, nothing really changed all that much, to be honest. KGHM down a little. Copper sort of had a little spike on news about Chile. There was I think, electrical outage, so some of the mines had to stop. And there's talk about tariffs, of course. So that had a little spike, but he's back down again. And on the option side, obviously everything's got fairly well whacked. Equinox down, Hymax down quite a bit. That needs sort of a push on the semiconductors, really. Hive obviously down a hell of a lot, 60% down on that now, 60% down on Riot. Obviously they need Bitcoin to get moving in a fair hurry, because these are end of the year options basically, or January next year. Kur mining is sort of down to 150%. It was up at 400 odd before. Silver sort of taking a bit of a knock. I did buy a little bit of CleanSpark, actually, sort of on this minor downturn. I wanted to sort of buy a little bit more miners, and I thought CleanSpark were looking quite attractive. Obviously they're still going all in on crypto mining rather than the sort of AI side, so yeah, they're not sort of issuing convertible debt to buy Bitcoin. They did do a bit of convertible debt and used it basically to improve costs, so that was pretty good. And yeah, I thought they looked reasonably attractive, so bought a little bit of that, bought a little bit more Hive, although I'm not entirely confident about Hive. They have one of the highest costs to mine a Bitcoin of anyone. I think they're sort of at about 80,000 at the moment, so yeah, basically they're pretty much net loss, even at today's prices, where a lot of the others aren't. So yeah, still got about 9,500 in cash, and I do have about 6,000 still in the bank, which I was weighing up buying crypto, or I might possibly put it in here. I haven't decided yet, but we'll see. Leave your thoughts in the comments below. Like and subscribe if you're loving this massive drawdown, and see you soon.